Hi everybody, Mindy here, and I'm going to do a video today that's going to be a little different than what I usually do, because I want to address some of the bold claims that I make. Because if you've seen any of my videos, you know that I tell you that you can trade in the Forex market without taking losses and making 200 to 400% annual growth in your trading account. Those are pretty bold claims. And so obviously that sets off everybody's skeptical radar, which it should. I have no issue with that. But what I want to do is give those of you who are skeptical a few reasons why I'm not being outrageous when I make the claims that I do. First of all, I have been trading Forex for 20 years. I've been teaching it for almost 20 years. And what my students say about me is that I'm honest, I'm trustworthy, I'm dedicated to my students' success, and I'm a great educator. So now you're probably thinking, well, if she's all that and a bag of chips, how come I've never heard of her before? And the reason is because until just the last few years, I've never done anything to promote myself. Virtually all of my students have come through word of mouth over the years, and I've taught about 700 people to date. Here's a map of the United States where I actually have students, and you can see that even at this point, there's still 5, 6, 7 states where I have no exposure whatsoever. And here's a map of the world showing the same thing. You can see that I've been at this for 20 years, and I still only have exposure in about 65% of the world. The scroll bar on the right is listing all of the countries where I currently have students and followers. The list stops at 100, but that's just because the analytics program only offers 100 slots. Okay, so anyway, check out the list. See if you recognize any of those countries and have friends there. Maybe your friends know who I am. Okay, but the thing is, it doesn't surprise me in the least that you've never heard of me before. I've probably never heard of you before either, and that's okay. But what I really want to focus on in this video is skepticism and the difference between being skeptical and being a naysayer. While I was doing this video, I realized that today is Columbus Day, and I thought, how ironic, because I feel like I have a lot in common with Christopher Columbus. He and I both had a great idea. We went on our journey to find it. We both found something not exactly what we expected to find, but a brave new world just the same. But even after we made our remarkable discoveries, we still have both had to put up with lots of skeptics and lots of naysayers. There's a saying that's probably been around since before the days of Columbus that says, if something seems too good to be true, then it probably is not true, right? Well, the thing that people have to understand about this saying is that the key word in this sentence is probably. The sentence does not say, if something seems too good to be true, then it's a lie. It doesn't say, if something seems to be too good to be true, then it's absolutely impossible. And it doesn't say, if something seems too good to be true, then you are a scammer trying to take advantage of me. The very fact that the word probably is in the sentence opens the door that makes all things possible. But it also suggests that a bit of skepticism might be warranted. Being skeptical just means that you have doubts. And from the data set that you currently have, you need more information before you can make a determination as to whether or not you believe the statement as true or not. But there's a huge difference between being skeptical and being a naysayer. A naysayer cannot be swayed from their preconceived conclusions. But worse than that, they will try to bully others into not looking objectively at the data because they want the power to shut down ideas that they cannot imagine. Here are some definitions and some words associated with naysayer. A person who says something will not work or is not possible. A person who denies, refuses, or opposes something. A cynic, misanthrope, Pessimist, a person who criticizes, objects to, or opposes something. Misandrist, misogynist, doubter, negativist, skeptic, belittler, critic, derider, detractor, scoffer, malcontent, defeatist, quitter. A person who distrusts other people and believes that everything is done for selfish reasons. One who denies, refuses, opposes, or is skeptical or cynical about something. That tells us quite a bit about the personality behind the naysayer, doesn't it? Who would want to be that person? But more importantly, who would want to pay attention to that person? Words that are antonyms to naysayer include optimist, Pollyanna, positivist, idealist, sentimentalist. We don't necessarily want to be that person either. You should never follow what I say just because I say it. Do your own homework and find out. Then make your own decisions. There is a huge bell curve of people between the naysayer and the Pollyanna, and this is what I call the skeptic zone. These are people who take the raw data, the facts, arguments, lessons, skills, and stories, and combine that with their own goals, fears, beliefs, and experiences to form an educated and wise decision about the question at hand. The thing is, two people can look at the same data and still come to different conclusions. And that's okay, especially when we're talking about Forex trading, because Forex trading really is not for everyone. Not everybody is interested in taking the time to learn it or taking the time to do it after they know how to do it. And that's okay. But I understand your skepticism. So if you're skeptical about the claims I make, reach out to me. Here's my email address, mindyyost@kc.rr.com. I've had the same email address for 20 years. I'm not going to change it. I'm always available. And I'm always happy to talk to anybody who wants more information about Forex or specifically the strategies that I teach. So let's start addressing some of the bold claims that I make about my trading strategy. First of all, I tell people that you can make 200 to 400% annually in your account. And initially everybody says, oh my, how could that be true? Because it's more profit than they've ever realized in any other investment they've ever been involved in. But let's break it down and see how it plays out. There are actually about 220 trading days every year, but for this example, let's just assume that there's 200 trading days because nobody's going to work every day of the year anyway, right? So if you have an account with a balance of $10,000, if your daily average profit is just 1%, which would be $100, at the end of the year, you have made 200% profit. And let's say now that your average daily profit is 2% or $200. At the end of the year, you have made 400% in your account. Now that doesn't seem quite as crazy, does it? But now you're going to ask, well, how in the world am I going to make 1% every single trading day? Well, you're not going to. But the historical average for my trading strategy over 20 years, it averages between 1 and 2% per day over time. Some days you might not make any trades at all, but other days you might make 5 or 10% in your account in one day. But over time, it will average between 1 and 2% per day. So let's take a look at what an actual trade might look like. Here is a Forex price chart. This chart is for the pair EUR-USD. This is the most commonly traded pair in the world. The point of Forex trading is to buy when the price is low, and then as the price moves up, you're making money, or to sell when the price is high, and as the price drops, you make money. Okay, it's that simple. The price can only do one of two things. It can move up and it can move down. But what makes Forex difficult is that it moves up and down as it moves up or down. Okay, But each one of these bars represents one full trading day. Okay? Now, if we wanted to make money in this pair, what would we want to do? We would want to buy when the price is low or sell when the price is high. Now, to make money, we do not have to stay in this trade from this low down here until this high up here. We just need to stay in the trade long enough to make somewhere between 10 and 20 pips. A pip is the smallest unit of movement in the pair. And I'm going to show you what 10 or 20 pips looks like. Okay, this green box represents 10 pips. 10 pips represents 1/10 of a penny. That's not much movement, is it? But on the chart, a 10 pip move would look like this. So let's say that we did a sell trade at this high. Now, I'm not saying that you're always going to get in your trade at the very top of a price bar or the very bottom of a price bar, but with my trading strategy, you will be getting into your trades near the high or near the low of specific bars that are ready to have a move where we know that we can get at least 10 pips from the trade, right? So if we had gone into the trade right here at the top of this green box and we rode that trade down 10 pips, that 10 pips would represent the $100 or the 1% that you're trying to make during this trading day. Now that doesn't look that unreasonable, does it? Because there's every likelihood that on this trade, had you gotten in up here at 1.1059, if you held that trade until the end of that trading day, you would have made 25 pips, not 10. 25 pips would be worth $250 in your trading account off of a one-lot trade. Now, does this seem that unreasonable to you that you could not do this most days? I hinted earlier in the video about how it's possible to make way more money in Forex than with any other kind of investment, like stock trading, options trading, investing in rare wine or rental houses. And now I'm going to show you exactly how that is possible. Forex is based on something called leverage. Leverage, as you know, is using the power of a tool, like a nutcracker, to give you more strength, right? Wrenches are tools of leverage. If you're trying to change a tire on your car, you know, you use the wrench with the long handle, because the longer the handle, the more power you have with the least amount of effort, right? So leverage is just another way of saying more power with less effort. And in Forex, what it means is that it's a money leverage, okay? So you're probably saying, but I don't have $100,000 to make that trade that you talked about. Well, you don't need $100,000 because of financial leverage. So with Forex, what happens is, for you to control a one-lot trade, you don't have to put up $100,000, which is the value of one lot, right? You only have to put up a small deposit toward that. And with most of the brokers that I use, the leverage that they offer is 500 to 1. So what that means is that for every $1 you're putting up to be in the position, the broker is loaning you $500 more. So if you're doing a one-lot trade, the cost to you for your deposit to be in that trade is only $200. It's 1/500th of the actual price. So for $200, you get to control $100,000 worth of currency, right? But the thing is, when you leave the trade, you get your deposit back. Your deposit is only held during the time that you are in the trade. So now let's talk about my claim that you can trade Forex without taking losses. That's a pretty bold claim, isn't it? But to talk about that, let's go back to our Forex chart that we were looking at a few minutes ago. The reason why it is possible for me and my students to trade without taking losses is because of the strategy that I developed. And the strategy that I developed 20 years ago allows me to be able to distinguish which ones of these bars are low enough to justify taking a trade on or high enough to justify taking a trade on. So if we know with 98% certainty that the trades that we go in will be good trades, we don't have much to worry about, do we? But we do have to worry about the 2% of trades that we might take that don't go our way, right? Because just like we're making $10 per pip as this price goes the direction that we want it to go for our trade, we would also be losing $10 per pip if the price continued to go higher after we had done a sell trade, right? And so what I did is I developed a secondary strategy for those situations. And I'm not going to get into that tonight because that's what you learn in my classes, okay? But I have a strategy for that allows us to make a profit off of every single trade that we take. It's not a joke. It's not a lie. It's not a scam. It's a strategy that I developed 20 years ago. So anyway, there you have it. That's pretty much my rebuttal to the naysayers who want to call me names and call me a liar and tell me that what I'm claiming can't possibly be true. But I can assure you that it is true. And I've taught 700 people over the years how to do it also. Okay, so there you have it. That's what I wanted to explain in this video. If you would like to learn the strategies that I use to make 200 to 400% a year in my accounts without taking losses on my trades, I am actually taking reservations now for the last class that I will ever teach before I retire. That class is going to begin on November 3rd, and it will go until June 1st of 2020. So if you want more information about that, you can go to my website, www.mindyyost.com. I am only taking a limited number of registrants for this class, and the class will fill up. So if you're interested in this class, please go to my website and sign up right away. And if you want more information about the classes, just email me and I'm happy to have a conversation with you about it. Okay? So thanks for listening. Bye for now.